Hello, everyone. Hello, hello, hello. It's your girl. I'm Pastor BJ Connections, Pastor Brenda G. Jones, and I am here. I do apologize. As you're chiming in, everyone say hello. As you're chiming in, say hello. We thank you all for chiming and waiting for us. We do apologize for just a little delay in starting, but we are here on tonight. I am so excited on tonight. How are you all doing? How are you? How are you all doing? Yes, I am on. I'm getting people texting me. Yes, I'm on right now. Yes, I did run a little bit behind. We were talking behind the scenes, y'all. That's why we ran behind, to be honest. But we hope you all are doing well. Hello. Hey, Kendria. God bless you. Hey, Kenyatta, Evangelist Petaway, how are you doing? Hi. Hey, Mom, how you doing? Good evening, everyone. As you're chiming in, I want y'all to do me a favor. Go ahead and share. Somebody's going to need to know this information on tonight. Somebody's going to need to know it. And I want y'all to share on tonight. Invite someone. Amen. Let them know that Pastor BJ Connections is live on tonight. We missed you all. We missed you all, but we're back. I know we've been away for a couple of weeks, and it's okay. It's good, but we are here on tonight. So go ahead and share. All right. We got some good information for you all on tonight, and I'm excited about our guest on tonight. We had the opportunity to meet through a mutual friend, and so it's good when you can connect with somebody through somebody that knows somebody with somebody that can help you along the way. So yeah, so we are excited on tonight. And so we have none other than Vincent A. Wilson. He's a financial professional. And so he will be with us on tonight. He is here with us on tonight. And we're going to talk about how to grow your money. So share with somebody on tonight how to grow your money. And it's time to grow your money. It's time to grow your money. Listen, y'all, you've been seeing me do this flyer and post this flyer, and nobody Nobody. I am just now seeing this, and nobody. See, y'all gotta read stuff. That's how I know y'all don't be reading. That's okay though. But nobody told me that I had you money and not your money. Oh, y'all. That's okay though. We all make mistakes. All right, so go ahead and share. All right, we're on YouTube live on tonight as well. Pastor BJ Connections. Go to our page, like, subscribe, ring the little bell, or click on the little bell so that you can be notified as to when we go live. I am excited on tonight. I am going to bring our special guest on. Listen, it is time to grow your money. Time to grow your money. All right. And so we want to make sure that you all have some good information, because that's what we do here during our live podcast, Pastor BJ Connection. We want to connect you with, first of all, Jesus Christ. And then we want to connect you with resources. We want to connect you with information. We want to connect you with people, places, and fun. So go ahead and like and share. So let's meet our guest on tonight. His name is Vincent A. Wilson. And I'm going to tell y'all, when we met up, we are live. Vincent, we are here. We are live. Listen, let me tell y'all, this is such a funny. I told y'all we're a little bit more relaxed on our podcast. We had listen, I had, through a mutual friend, they introduced me to him, saying this will be a great person to help you do what you're trying to do on tonight. And guess what happened? I'm calling him. I'm asking for Mr. Williams. His last name is Wilson, and I'm asking for Mr. Williams. And so he answers the phone, but he says, no, Mr. Williams. He hangs up. And so we ended up having a good, funny laugh at the beginning of our meeting of one another, because I actually messed up his name. So but he was so kind and so gracious. And he said, no, my name is Wilson. He said, I kept wondering who you were asking for, where you get Williams from. So we are here on tonight. Hello, everybody. When you're chiming in, say hello, say hello. All right. And so everybody say hello to Mr. Well, we're going to call him Vincent on tonight. We're going to drop the formalities on tonight. All right. This is Vincent. Vincent A. Wilson. He is a financial professional for Avantax services. Right. So he's been in this thing for a moment. I'm going to let him introduce himself, tell a little bit about himself, and then we're going to go into our segment for tonight. So how you doing, Vincent?
I'm doing great. Appreciate the opportunity. How's everybody else doing out there? Hope everybody's doing well, staying safe.
Yeah. So tell us a little bit about yourself. What do you do? What do you specialize in? You're a financial professional, and that can mean a whole gamut of stuff. So tell us a little bit about yourself.
Well, mainly I do manage money, mutual funds. I used to do the stocks, individual stocks years ago, but I wanted all my clients to end up being able to sleep at night. So when funds manage money was better. That way I'm able to sleep at night if they're able to sleep at night. So that's what basically I do. I've been doing this for 31 years. I have a degree in finance from Texas A&M at Commerce, Texas. And so, it's my work, but my line of work, but it's rewarding for me. I like to help people with this stuff because, our community has been shut out for a while, and I just had to figure out some kind of way to be in the industry and do what I like to do and help people and enjoy it.
Awesome. Also, so you said you've been doing this for 31 years. That's a long time. And so you've been dealing with numbers and money for a long time. All right. So we're going to get into our segment on tonight. Hello. Hey, Sister Gloria. Hey, Brother Kelly. How are you all? Everybody saying hi to you, Vincent. If you chime over there to the comment.
Oh, yeah. Okay. How's everybody? Yeah. All right.
People down there. All right. And so we want to talk about tonight. We want to talk about, listen, I do want to say this. I won't have anybody on my podcast or on my platform that I don't trust or believe that they can help you or assist you. So I want you all to take down his information. I want you all to write his name down, put his information in your phone, his business, his website. Go to his business and his website. It's scrolling across the bottom, and I want y'all to make sure that y'all contact him. I think he's going to be a great asset to your life, to your finances, to your children, for your generational wealth, for your retirement. I think he's going to be a great asset. And so I want you all to definitely take down all of his information, go to his website, hit him up, bombard him with questions, y'all. And not only bombard him with questions, but also bombard him with some business. Okay. Make sure that y'all know what you need to know in this time, in this age that we're living in, and what would be the best practice for you. He can help you out with that. He can help you out to say, I think maybe you might need to go in this direction, or maybe you might need to go in this direction. This will be great options for you. So I want y'all to do that for me. Go ahead and take down all of his information. So let's get into our segment on tonight. So the reason why I really wanted a financial person to come on our platform was because one, I'm big with eliminating debt in one's life, right? I went through this whole life moment where I had like tremendous debt, right? Not understanding finances, not understanding the power of a dollar, not understanding, the benefits of saving, right? I went through all this in my life, younger years in my life, 20s, some of my little 30s, I went through all of this because for the most part, African American families really don't teach financial responsibility. We don't teach about the power of the dollar. We don't teach about savings. We don't teach about, how to build wealth and how to tack on that wealth for the next generation. We don't teach those things. And so I've learned hard lessons in life financially. So now I've grown accustomed to saving. I've grown accustomed to figuring out finances and how to work finances. I dived into the stock market. I think I was telling you that my first time out, I bought some stock, and I wish that I had bought a whole lot more.
It's always the case.
I wish, right. I wish that I bought a whole lot more. I bought a stock at, I think it was like $24, right? And some change. And now this stock is literally 200 and worth 200 and some dollars. And this has been maybe within the year. The stock has quadrupled. Yeah, it exploded. And I wish I had more stock in it, right? So I learned about that and the steps to do that, but I did not know how to take it any further. Always knew about savings bonds. I don't know why, but I love savings bonds. I was helping someone out, and you live and you learn. I was helping someone out, and I actually cashed in my savings bonds early. So I'm getting back into getting savings bonds because that's another form of saving and creating some sort of wealth in your life. So what we want to talk about on tonight, you said that you deal a lot with mutual funds.
Correct.
Tell us about mutual funds and what are they? How can they help us out? And what do they do?
Well, a mutual fund is nothing more but a pool of assets from investors, money from around the world. Everybody that's involved in it, all the shareholders, they don't know each other. It could be some shareholders from Texas, it could be North Carolina, it could be Florida or whatnot, but everybody's pooling their money together for the same goal. So it could be a mutual fund that's a growth and income fund where you want to grow your assets, but at the same time, get some quarterly dividend. Okay. You could just want to be a small company mutual fund to where now you're investing in a pool of assets that invest in the innovative companies that are coming out there. It's sort of like your tech companies, whether it's the new cell phones or whatnot. Or you can invest in a bond fund that's purely for providing a monthly income. So normally the older investors are looking for that. Now the younger ones, they want to grow the assets in some good growth funds, whether it's small, medium, or large companies. But then when they get older, the investor gets older, they want to invest in something less riskier, but something that can provide that monthly income because now they're retired. They're not going to work. And so they're going to rely on the assets that they put together years ago to provide that monthly income.
Okay.
So, but yeah, mutual fund is, think of it as a basket, different companies that are involved, whether it's say food and beverage, housing,
Okay.
or technology or whatever, but they're all bunched together in a big old pool of say $2 or $3 billion, but you're just an investor investing in that particular fund for that goal.
Now, what do you need? Like, do you need a large sum of money, a small? How can you start out with a mutual fund? What would you recommend is the best um, amount of money to start off with if you wanted to invest in a mutual fund?
Well, years ago, it did require a lot of money, whether 2,500 or 10,000, 5,000, whatever. But now mutual funds have opened up for the smaller investors because they want them to participate in the asset growth as well. So now you can get started with some mutual funds for $50 a month.
Oh wow,
So,
okay,
right.
that's reasonable.
Yeah. So when you do the math, that comes out to what, $12.50 a week,
Right.
basically. So, and a lot of us, when we put our minds together, get our minds right, we can do 12.50. We can do 12.50 a week. Just cut out a certain amount of things
Mm-hmm.
that we do, whether it's a Starbucks or a McDonald's breakfast or whatever,
Mm-hmm.
uh, chicken sandwich, whatever you want to do.
Right.
Just cut it out, But you want to make investing a habit. We
Mm-hmm.
have a habit of doing certain things on Mondays, Tuesdays, or whether it's your favorite television show that you want to catch to make sure you don't miss for the week, or whatever. Well, we have to make investing a habit as well. And so I would recommend starting out small, something that that you're not going to miss in your monthly budget, whether it's $50 or whatnot,
Mm-hmm.
and get started that way and make it become a habit for you.
Right, right. Okay, so listen, hey y'all, just want to let y'all know that y'all, if y'all would have a question for Vincent, then please put your questions in the comment section and we will definitely answer your questions. If we don't get to your questions tonight, again, take down his information, connect with him and get his information, ask the questions that you really want to be answered. Okay, so if you have any questions tonight, feel free to put your questions in the comment box. Okay, this is what I'm interested in. I think when we start talking about money, when we
Mhm.
start talking about investing, when we start talking about savings, especially in the African American community, that becomes us talking like, in a whole totally different language, like want, 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 want. We start talking and people start looking like a deer in headlights when we start talking about those things because we're not used to having those conversations,
Right.
right? We're not used to having those conversations. So what happens? I was reading an article in Washington Post, right? And I'm going to put this up here, you guys. I want y'all to know this. I want y'all to understand this, right? And we hear it so often, but it really is truth, right? It says that, let me take this down. Let me take my logo down. All right. It says the NAACP and other organizations suggest that the black dollar is unregulated. Study says that the average lifespan of the dollar is approximately 28 days in the Asian community, 19 days in the Jewish community, 17 days in the white community, and just 6 hours in the black community. So that speaks a lot. That speaks volumes as to what's going on in the African American community. That our money goes out quicker than it stays with us, right? So when we look at those stats, it'd be very hard for someone in the African American community to even generate some type of savings or some type of wealth because they don't have these type of conversations.
Mm-hmm.
They don't have these types of they don't think on this type of level that I'm capable and able of investing and growing my money, but I gotta spend my money.
Right.
So when you talk about the mutual funds, you talk about the level of risk with mutual funds. You said some younger people, they want the more, a little bit more risk. As you get older, you want less risk. So you said it only takes $50 a month. $50 a month. We
Right.
spend more on that on clothing, sneakers, uh, eating out, like
Right.
going to restaurants. Listen, you spend more of that. Most Black folk love crabs and crab legs, right?
No, I do.
Right? I know I do, right? You spend more on that stuff than actually investing in your future, investing in your children's future. And so, mutual funds, he's telling you all that you can start a mutual fund like tomorrow and watch that thing grow over some years, long as you don't touch it, right? So when you
Right.
do that, you do it whereas though you do it, but you got to kind of almost in a sense forget about it.
Mm-hmm.
Until it's time for that. Am I right with saying that? Tell me.
That's correct. Yeah. Try not to disturb it. And that's why you want to set up another account. Say, for instance, two accounts. You want to have an account for that emergency, because we've all been there. Something happened at the house, car problems, and if we always have a car problem, it's never $100. It's always going to be 500, 1,000, whatever. So we have to put away some money for that emergency, because we have our long-term money on the other side working for us.
Mm-hmm.
But we don't want to take down our long-term money to handle a short-term problem. So we want to have some money that's invested short-term. Now it's not going to fluctuate. You don't want it to fluctuate with the stock market at all. You want to have it in some type of short-term bond fund or something.
Right.
But your long-term money, you're going to have in stocks, because again, you don't want to have 5,000, 10,000. All of a sudden, you got a car issue, and I'm gonna have to take out my long-term money to handle it. We are just spinning your wheels, and so then you're going to have to rebuild the long-term money. But yeah, you've got to be financially prepared for any of the emergencies that come up. But a lot of people, what they're doing, they may see the market do some bad things, and then they start to pull out, not knowing that those are the best times to start buying. Case in point, the market was down hard, around about 19,000, 20,000 in March, this past March, when the pandemic first hit. Now we're above 33,000 on the Dow Jones. Those who sold in March of last year are probably kicking themselves right now, because they missed all of that growth because of an emotion. And that's one thing we have to remember too. We have to take out the emotions of investors. Once we set a goal to say we want to reach this amount of money, then I'm going to pull my investments out. Wait until it gets there before you decide to pull it out. Because right before you get there, there may be a problem, and then you decide to pull out, but then you watch it end up going back to that level anyway, exactly where you wanted the goal to go. So we have to be patient with this stuff. We just do. And that's one thing that a lot of people do not have, whether our families or our communities or another communities.
So Paula Randolph says, "Sign me up." And then she asks a question. She says, "Is there a limit on how I guess she said how many you can have at one time?" What specifically are you talking about? Is there a limit as to how many you can have at one time? Paula, what specifically are you talking about? Are you talking about mutual funds? Or what specifically are you referring to? All right. So we're going to get back to Paula. Okay. So, and when Paula chimes back in, we'll definitely get back with her to try to answer her question as well. Okay.
But let me just say though, you can have as many mutual funds as you want. Yeah, you can. Yeah, she said mutual funds. You can have as many mutual funds as you want. The limit that you end up having is that if you have an IRA, you can have as many IRAs that you want. However, there's a limit to what you can contribute annually. So, say for instance, $6,000. you can have a million IRAs, but you can only contribute 6,000 total in those millions. So, but an account that's not included in an IRA, which is what's called an individual account, or the mutual fund may call it a cash account. You can have as many mutual funds in that account as that you want.
So let me
Different.
ask, okay. So when we talk about the mutual funds and the IRAs, right?
Mhm.
You have the Roth IRA and you have the traditional IRA, right?
Correct.
Okay, so explain what's the difference between the Roth and the traditional IRA.
Well, the traditional is basically both of them grows money tax deferred.
Mhm.
With the traditional, it depends on your income whether or not you can have those contributions tax deductible.
Okay.
With the Roth IRA, those contributions are not tax deductible. However, if you've held the asset for more than 5 years or more, then you're able to withdraw those assets tax free. The Roth has become more popular than the traditional because of the tax situation. If you can take money out tax free, that's what we want to do, because when we're older, we don't know what the tax burden is going to be on
Right,
individuals
right.
or the tax rate. So, but no matter what, if it's 50% on the normal investor, if we're able to take it out tax free, that's a benefit for
Well,
us.
yeah, we want tax free because
Yeah, definitely.
the States of
As
America
much
will
as
tax you like crazy. So
correct.
we want tax free. You
Right.
want you want tax free, y'all. All right. All right. So all right. So let's talk about I'm I really got into this thing about savings. And I often tell people, especially when I'm talking to them, counseling them, trying to help them out, in different aspects of their life, coaching them or something like that. I talk to them about saving. And I often say, if it works for you, I like to save in ways, different
Mhm.
ways of savings. You have your traditional savings account, right?
Right.
Then you have your IRAs. That's another way of saving. And then I often then I'm a big believer that somewhere somehow you need to have some access to some cash,
Right.
right? On hand. You got to have access to cash. And then I also incorporate savings into what looks like gift cards for, like, when you talked about those emergency things, like
Okay.
things come up and you don't want to pull money from your long term and all that stuff, but then you have gift cards or different things, or that way you won't even have to spend your actual money. So sometimes I get restaurant gift cards, or Walmart gift cards. So if money's low, or I don't have to go to my actual savings account, right,
Mhm.
pull money just to meet a daily need,
Mhm. Mhm.
right?
So
So that
these are gift cards they're giving you. Some people are giving you these gift cards.
even I buy some gift card people give me, or I buy myself. Like if I
Okay.
have extra, instead of me, maybe getting on crab legs that week that I want, maybe me not getting those crab legs, and I go get maybe 2 gift cards,
Right.
and I set
Okay.
them aside. And
Okay.
so then if I'm a little low that particular week because something came up that I wasn't expecting, and I don't have to go into quote unquote my actual savings account, then I can go in my safe and say, hey, I got some gift
Right.
cards here. I could get my gas. I could go shopping. I could do whatever. Or if
Right.
I'm just hanging out with some friends unexpectedly, this wasn't in my entertainment budget, but I want to go anyway, then I got some gift cards that I could go grab, and it's not going to affect my
Yeah.
actual money, because I'm not going over my budget because I got this as a reserve on this side. So it acts as a reserve,
Hmm.
you know.
Whatever works for you. You
Yeah,
know.
right. And
Right.
so let's talk about savings in
Okay.
high yielding savings accounts. A lot of people don't know about high yielding savings accounts. We just deal with the traditional savings account, which I myself I was trying. Let me tell y'all this story. I was trying to get in with this black bank. I'm not even going to name their name. I was trying to get in with this black bank because they had a high yielding, savings account. And I really wanted to get into this black bank because I was like, shoot, pro black, come on, gonna get into this bank, right? And they just treated me so not nice. And I said, that's okay. I don't want to go. I don't want a savings account with y'all, you know. I wanted to talk to somebody because I had some questions, and they were like, no, you got to do everything online. I'm like, you mean to tell me I can't get, verbal customer service with you all? Like, I can't talk to y'all. That thing bothered me. And then the lady was just so not nice. And so I just decided that I was not going to do it. And it kind of discouraged me a little bit from high yielding savings account. How can a person find high yielding savings account, and what are the benefits for high yield savings accounts?
Well, normally you can find those online too. I'm sorry to say, but yeah, you have to look for those online. But again, you
with another answer. Go ahead.
Yeah, but like you said, you want to deal with somebody, verbally, which is okay. That's what a lot of us like. When we have an issue and we have a question or something. But instead of a savings account, it may show you high yield, but then that's when you want to look at a high yield mutual fund, because those exist as well.
Oh, okay. Okay. Now, I didn't know that.
Funds,
I did not know
that. They're out there, high yield funds that invest in municipal bonds like the city of Charlotte, city of Houston, or whatnot. They give you that tax benefit as well because the dividends from those funds are tax free. So you don't have to claim those on your taxes, as opposed to a regular high yield fund. You'd have to include that if the dividends reach a certain amount for the year, you have to include that on your income. But with tax-free funds, you don't have to worry about that.
Oh, so okay, wait a minute, okay. Let me make sure I'm understanding. So you got high yielding mutual funds, and then you got tax-free mutual funds.
Correct. Now, normally those are different than the short term. The reason it's high yield, the maturity is a little longer, and normally the portfolio is made up of what's called junk bonds. These are companies that can't go to the bank and get money, but they can issue bonds on the exchanges to raise money, but then they have to pay a higher interest rate for that reason. But it's not going to be as calm as your normal bond fund because of the high yields. Again, when you're reaching out and trying to get a higher yield, you're taking on some more risk for that. So any interest rate move upward may trigger the downwards on the bond fund for a little bit. Does that make sense? So basically like this, interest rates and bonds move inversely. Interest rates go up, bonds come down, bond prices go down.
Oh, okay.
And the opposite. So when you're talking about a bond fund that already has a high yield interest, any movement further up, you'll benefit in the interest, but the value of your asset may come down just a little bit in a period of time.
Oh, okay. I did not know that. Okay.
Yeah.
Okay. So it's kind of like the opposite. They're polar opposites. Okay.
Correct. Yeah, your price of your bond and your interest rate are inversely related.
Okay.
And see, let me say this too. Your high yield that you thinking you're going to get at the bank. Here's one of the tricks that they do. They can say, okay, bring us your money. And we'll give you this high yield rate. Say for instance, right now, banks may say high yield is 2%, right? But what they'll do is take all of the assets that they pool together in the savings account, high yield savings account for 2%, put it in a mutual fund, it's getting 4%, right?
Oh, okay.
So all they have to do is provide you 2%, but the assets are getting 4%.
Oh, wow. Okay, so you're losing 2%.
Right, because in your mind, I'm at the bank and I'm being safe.
Right.
However, the bank is not there to help you become wealthy. The bank is there to house your money,
Right. And use
and
your money, actually.
yeah, they use it in a way for them to become profitable. So if they can invest in some bonds or funds yielding 4% and chart and give you 2% high yield, that's what they're going to do. But you individually can go out and get that 4% yourself.
Do y'all understand that? So listen, not talking negative or down about banks, but
Right.
it's better to cut out the middleman. That's really what he's saying. Cut out the middleman, go get it yourself, get the 4% that the bank will be getting, and so that you can make, just as much interest and percentage on your own money,
Right.
cancels out the bank. So you're cutting out the middleman. It's always better to cut out the middleman. Okay. So since we're on this thing about mutual funds and talk about savings bonds, because
Okay.
I used to I'm in love with savings bonds, even though I told you I made the
I see.
mistake, but I love savings bonds, right? Don't ask me why. I've always liked them. I don't know, just sound, I don't know. But anyway, so let's talk about savings bonds, because they've changed, right?
Yes.
Um, and so I bought a savings bond a few years ago for a niece of mine. I bought a savings bond for her birthday. I wanted to be like, this is my investment into your future. Let this sit here. You're just a little witty bitty baby, and so let this sit here and let it just grow, until whatever. But it was so difficult getting a savings bond. At one point in time, you could go to the bank and you could get savings bonds from the bank, and they would give it to you.
Yeah.
Then the Federal Reserve changed it. See, I know a lot about different stuff, then the Federal Reserve changed it, and now you have to go online to get savings bonds through the Federal Reserve, which is a lot difficult, actually. And I think, if I'm not mistaken, and please correct me if I'm wrong, that they cut some of the benefits of a savings bond.
Mhm. Yeah, they changed it up to what I mean because it used to be a bigger demand for
Right.
savings bonds, but now they don't. The public is not into the savings bonds like
Right.
they used to be. So a lot of people are now switching to different type of investments other than a savings account.
Right.
Because now we have the introduction, especially for your niece, there's the introduction of college savings accounts or 529s,
Mm-hmm.
where a parent, an aunt, an uncle, or whomever can put money away in those accounts for their niece, nephew, daughter, son, whatever,
Mm-hmm.
and get a better return than the savings account.
And so
So that's why the demand is down.
Okay, so that's another thing. Listen, parents, you have children. You want to save for your children. Take $10, every pay, and just put it into an account.
Right.
Vincent can help you all with that as well, to teach you how to save for your children. So this is what other cultures and races do. They put money. They start very young with putting money into an account for their child or their children, and then what happened when they get to 18 or 21, what they consider to be their maturity age of when they think they can handle this money, then they have a few $1,000s, more than a few $1,000s, but I'm just saying it for the sake of this conversation, a few $1,000s sitting there waiting, either for them to be, start their life, for them to go to college, for them to, start a business, for them to, buy a house, whatever it is, to help, push them along the way, push them, to help them see, like, listen, we want to give you a leg up so that you won't have to struggle as much. But again, this is the language and these are the conversations that we really do not have in the African American community. Yes, I'm going to put in this plug because it's my platform. Yeah, it's mine. So listen, this is why I am doing what I'm calling Yes. It's Young Entrepreneur School for 12 to 17-year-olds. We're teaching them how to be CEOs, teaching them how to work finances and invest in themselves and grow and start a business, grow a business, market a business. And then also, then we can go ahead and advance them to some other things to give them a leg up for when they're really out there on their own, becoming independent. They're not afraid of money. They know how the power of money, but they don't let money control them. They control it.
Right.
You know, and so this is a big factor that we don't have an African American community. So savings bonds, I think is good. You know, but I'm the weirdo in the, most of the time. So I think savings bonds, I love savings bonds. I don't know why, but I do. Just like I love $2 bills, right? I love $2 bills. I do. I
Oh my
love
goodness.
$2 bills.
Really? Why? You think it's going up in value?
No, I just love $2 bills.
Oh, you like the way they look.
I think that's what it is. I think it's
Oh, okay.
I
All right.
think it's
It's
because of the
different.
two. I don't
Yeah,
know.
okay.
But I love $2 bills. Listen, you kind of like frowned on that, Vincent. What's up with
Well,
that?
I'm just saying, no. When I was younger, I used to collect them, but then you realize, hey, $2 back then is still $2.
It's
So
still
it's not,
$2.
yeah, it
I
didn't
just
go up in value or anything.
All right, so somebody said they're interested in knowing about stock. We're gonna go into the stock market because listen.
Okay.
I have fell in love with the stock market. I really have, and I'm trying to. Somebody. Oh, hold on. Let me see if I got it right here. I was told. Now I don't know how much you know about these, Vincent. So we're gonna try to have this conversation anyway. So I was told to look into some stock, right?
Okay.
And specific stock that I was told to look into was non fundable tokens.
I knew you were gonna say that.
Listen, this is what
I knew you were gonna say that.
okay. This is what I was told to look into. I have not looked into it. I have not researched it. I'll do my research now. I will do my research. I was told to look into cryptocurrency
Right.
and what's this forex trading market.
Correct. Right.
Okay, so stocks. Let's start with stocks 101 first,
Okay.
and then we can go into those. What is about stock 101? Now I've learned
Go ahead.
that
You
you
learn.
gotta find stocks with dividends. I've learned
Okay.
that in my research.
Right. So
Okay.
yeah, it depends on the individual company. So a stock basically is ownership in a company.
Mm-hmm.
So say for instance, you go out there and you buy 100 shares of Coca-Cola. Now you are a shareholder of Coca-Cola. So you're benefiting in um, how the company is growing and selling Cokes and all these different Cokes around the world,
Mm-hmm.
right? So the profits that are coming in is part of your investment. And if it's increasing the value of the company, more than likely it's increasing the value of your part ownership. One of the things is if you started your own business, you are 100% shareholder in that company.
Uh-huh.
Well, Coke is already an existing business. All you're doing is investing in an existing business in the form of stock. Now, Coke is one of those companies that you were talking about that pays a dividend. So now they're considered a mature company because they've been around for so long. They've saturated the market they're in so many countries. So now the revenue that they're getting and the net profits that they're getting, they're able to thank the shareholders for being there by providing a dividend, a quarterly dividend from them. Now, a young company that might have, say, for instance, a new flavor of drink, they just now coming to the market and they only have one drink. That's considered a small company, of course, but a young company. So therefore, they wouldn't be providing a dividend because they need every dollar that they can make to
Okay.
put back to the company. So they're not going to give their shareholders dividends. They're going to invest that money back into the company. But that's considered a stock. A stock is basically ownership in an existing company.
Okay. So, and listen, one thing I know is that you really have to do your research when it comes down to stock. One thing I don't know how to do, which I'm trying to teach myself, and maybe I need to take a class, is how to read the stock market. All I know is that when stuff hit red, that's not a good sign. When it hits red is not a good sign. But when but it has a great potential on growing, right? Um, mutual funds are more safe right? Because the risk, you got some risk in mutual
That's
fund, but not as much as you have in the stock market. And
right.
Sister Gloria, we're gonna get back to your question. We see your question. We got you, Gloria. All right. So, but when you're in the stock market, there is a greater risk of losing money.
Mm-hmm.
On an average, what would you say that people need when they're buying a stock? What would you say would probably be a minimum amount of stock that they should probably invest in a company, or does it depend on one? I know it depends on their finances. Two, what else would it depend on?
Depends on the price of the company as well, the price of the stock. Let's say, for instance, a lot of individuals they like buying what are called penny stocks. Well, they are penny stocks for a reason. They're cheap as they can be. They may be having a lot of debt on the balance sheet. They may not be making any money, and the product that they're providing or service that they're providing may not catch on to the rest of the public. But now you take a company that's trading at $100 a share, you may not be able to buy that many shares, but the difference is that if you're trying to trade stocks, you want that $100 share value or something that you can trade and buy a bunch of shares on because you want to be able to get that $1, $2, $3 movement, right? So you're trying to trade for $100 stock, you're trying to trade for 101, 102, 103. And those particular companies, they move like that. Well, when you're trying to buy a $15 stock, you can get a bunch of it, or some people end up buying a little bit of it. It takes too long, and the stock price doesn't move as frequently.
Okay.
If it goes to 16, 17, $18, that's a huge move, but it's not going to be done like that all the time in one day. As
Right.
opposed, as opposed to $100 stock that has a big amount of volume trading on a daily basis can easily move from 100 to 99 or 100 to 101 to where you can catch those swings if you're trading stocks. So it depends on, again, like you said, your finances that you want, the quality of the company that you want, and your patience for the company that you're looking for as well, that you research.
So okay, so you said trading, right?
Mhm.
So like for me, I'm trying to make a decision. I have this stock, and we talked about this stock. I'm trying to make a decision whether or not. So, what do I do with this stock? Do I sell it? Do I trade it? What's the best? Like, do you sell stocks or do you trade stocks? Say you make money. Like I made pretty good money with this stock, right? And it's sitting there. So I'm like trying to figure out, like, okay, what do I do? What's this next move? What's the difference between selling and trading when it comes down in the stock market?
Well, it depends on if you set your goal. Say, for instance, you bought the stock for $25. Now it's 125. Did you set your goal? You should set your goal before you even buy it. Say, okay, I'm gonna buy it
I
here,
didn't know all that
and
when
then
I
there's
bought
going to be
it.
a certain amount. Yeah, it's going to be a certain amount before I sell it. Then when you reach that goal, just go ahead and sell it because then you've made your goal. The question is now, once it reaches 125, are you trying to become a greedy person? And all of a sudden you think it's going to go to 250, but then you look up, now it's back to 25. So it's all dependent upon what your goal you've set before you purchase the stock. What is your objective in purchasing the stock? To take it or ride it all the way up for 100%, 200%,
Okay.
if it goes that way. But
Okay.
if it doesn't, how long are you going to hold it? You've got to come up with those particular parameters, or you just be knocking yourself crazy trying to figure out what to do with it.
And so I did not have that goal at the beginning, Vincent. So yes, that's probably why I'm driving myself crazy, because I did not know. I did not understand it. I was researching, studying, reading, all that wonderful good stuff, because this is something that I wanted to dive into, and I
Yeah.
dived into it, and now I'm like, okay, boom, this stock blew up, and I'm like, what
So
do
is
I?
this, you still own it?
Huh?
Do you still own it?
Yeah, I still own it.
Well, then you should also look to protect what you got going on. Put under it what's called a sell limit. It's
Okay.
called a sell limit. That trade. Put a sell limit on it. Say, for instance, as an example, if it's $200 and you said you've got a big old profit in it. Let's say you want to lock it in there, and you put a sell limit in at 190 if it's $200. That way, if something happens and a bad earnings report or whatnot comes out and the stock starts to come down at 190, you automatically sell it. It sits there. It's sitting on your account as a sale for 190.
Okay. And see, that's
You know
what,
what
right. I get, okay. Now that makes sense because here it is. Like the other day, it took a little nose down. And I was like, but then, yeah, I like to have a heart attack. I was like, clutching my pearls for a second, like, oh my word,
right?
and then it went back up, and so it's back at the place where it was, right?
Mm-hmm.
And so I'm like, okay, I have a goal in mind because it's right now is at 287.
Okay.
So I'm like, my goal is, I'm like, if it hits 300, that's it, I'm done, right? I'm gonna get out of it, right? Sell it
Okay.
off if it hits 300. So that's my goal right now. But I don't know, like, because I'm
Well,
like,
you can put a sell limit on both sides.
okay.
You can put a sell limit at 300. You can put a stop sell limit at two something below where it's at. That way, that 300, you automatically hit it. You're gone. You sold it.
Oh, I
You're
didn't
happy.
do that both sides. Okay.
Yeah.
All right.
Yeah.
So
And
let's
so
listen.
but then when it gets to that point, either point, it automatically triggers the sell.
Okay, cool. All right, I got that. All right. So let's answer Sister Gloria Kelly's question. He says, "What about artificial intelligence stocks? Do you know anything about that?"
No, Sister Glow, I don't know too much about that. That's above my pay grade. And the reason being because I don't follow a lot of stocks. Like I said, I'm a mutual fund guy.
Mm-hmm.
I only follow a handful of stocks for entertainment purposes. But yeah, nothing artificial intelligence.
All right.
I'm
So
sorry.
okay, but we can find out about that. No problem. Paula says, "When setting up mutual funds, can it be at an auto pay? Can it be put on auto
Yes.
pay?"
Yes, that's one of the best ways to do it. You can have it set up to your bank account to where on whatever day you want, it'll just automatically make that purchase for you into the fund, and it's one of those out of sight, out of mind
Mm-hmm.
type deals, and that's a good way to set up an investment for yourself. Set it up just like a bill pay or whatever, however you want to set it up.
So
Make it easy.
you're welcome, Paula. Listen, I'm definitely going to be setting up a mutual fund with him and put on and so now that I know I can put it on auto pay, that's a blessing right there because I'm going to like, go ahead, take that so I won't mess with it. All right. So I won't mess with that money. So definitely, y'all, listen, hit up Vincent. Y'all see his website. Y'all see his website and his company's name, his business name. Go ahead, hit him up, check him out, talk to him some more. I do have another question. It says, for retirees, can you be in retirement and have a Roth IRA?
Yes.
You can be.
Yes, you can be in if you already have it existing, and depending upon your age as well. There's a limit on traditionals, 70 and a half. You got to start taking that down. But with a Roth, there's no limit, so you can have a Roth IRA in retirement, paying your monthly income. It's just that the assets, again, in order for you to start taking money out tax free, you have to hold the assets at least for 5 years.
Oh, okay. So you gotta hold it in a Roth. You have to hold it for 5 years before you can take
Or
money
you
out.
can start taking it
So is
out
that
tax free.
okay?
Tax free
So is
benefit.
that at any age or is that at retirement age?
No, any age.
What? I
Yeah,
didn't
you
know
can be
that.
59 and a half and 70 with the Roth, and you're able, as long as you've held the asset for 5 years, you can start withdrawing it tax free.
Come on now, I didn't know that.
Yeah.
Wow. Okay. Well, see, I did not know that, but that's good to know. So listen, y'all, hold your Roth IRA for at least 5 years. Hopefully, they won't change no tax law in between that time.
They won't, hopefully, they don't change the law for the Roth. They can change the tax laws all they want, but you know, if you still hold that Roth when you retire, you have that tax-free benefit. Can't beat it.
Yeah, you can't beat that. You can't beat that at all. Okay, so let me see. Make sure I got all my questions. Okay, so do you know how somebody can actually set up? When we talk about, they can come to you for mutual funds, right? So how can someone, different ways that they can set up a stock account, like to get into the stock market?
Same way to open up a brokerage account. It's the same thing. I mean, we have them. I just don't use them. But you're basically contacting a broker dealer like Avantax, say for instance. You know, Avantax does the same thing as a Merrill Lynch or a J.P. Morgan or whatnot.
Yeah.
It's just that the individual, like myself, uses a smaller firm for different reasons. But you basically opening up a brokerage account, and you're going to fund that brokerage account with money, and then you're going to end up buying and selling the individual stocks in that particular account. So it's not even that hard to do. Um, Paperwork. That's all it is. Open up a brokerage account.
See, there you go. And so Paula says she's going to be contacting you tomorrow. All right.
Okay.
She's been waiting for this. So
Let me
she's
give you my number.
okay. So let's see if we can put your number in the
That
uh
scrolling thing. That thing is cool.
all right. So we're gonna put your number up there. Hold on, let me get one for you. Okay, what's your number?
972
Hold on.
21. Okay.
972
217
217
5112.
5112. All right, y'all. So take down this number. Um, for Vincent, this is how to get in contact with him, to talk to him, set up those accounts, get those mutual funds going. We want you, listen, a lot of y'all getting these $1,400 stimulus checks. Everybody should be getting those $1,400 stimulus checks. Hopefully you are. I hope you are anyway.
Right.
But you get in that $1,400 stimulus check. Some of y'all with young children, y'all going to be getting extra money with them, right?
Mhm.
So, and then on top of that, guess what, y'all? It's tax season. So some of y'all going to be getting your tax refunds. Y'all going to be rolling in the dough, right? So grow your money. Grow your money. Get in contact with Vincent like ASAP, so that you won't spend that money frivolously. You won't spend it on something that you know you don't need.
Mm.
You know you don't need it. You have enough clothes in your closet. You have enough shoes in your closet. You have, ladies, you have enough earrings. If you like me, you have enough jewelry. You have perfume. You have plenty of Bath and Body Works. All right. You keep making them rich.
Wow.
Buy some stock in it and get yourself rich, right? You have all this stuff. And all of us, let's be real. Well, some of us, most of us anyway, we need to cut back from the table anyway. Y'all know I'm telling the truth.
You,
All right.
you hard on them, boy. I tell you.
They know I love them. They know I love them. I got their best interest at heart. I want you all to, like, listen, I want you all to be at a place where where you're financially stable and have freedom in your finances, right? The Bible even say money answereth what? All things. Right? So you don't want that weight of debt. And that's another thing. Get out
Yeah,
of debt.
for
Get
real.
out of debt. Debt is a weight. Get out
For
of debt.
real.
Pay off your debt. Pay it off. Get
Yep.
out of debt. Every time you help, every time you owe somebody and you're constantly in debt, guess what? Then you take from yourself. You take from your future. That's another year away from your future because you don't have money like that. If you had money like that, then it wouldn't matter. But you don't have money like that. But that's taking
That's
away
a
another
whole
year of your
nother
future.
program right there.
Huh?
That's a whole nother program right there.
It is. It
Yeah.
is. It is. We're going to do a segment on how to get out of debt. Like, listen, how to pay off your debt. Trust me, I have done it. I've owed the IRS at one point in time $10,000 for a bit. For I had a business. A lot of people don't know that I had a very valuable business, but because I was not educated, because I was not knowledgeable the way that I am now, I made a lot of stupid mistakes, and so I ended up owing the IRS $10,000. Paid it off. Whew.
Yeah, you
It
don't want them on your back.
Yeah, it hurt. Oh, it hurt. But
Hire a professional tax preparer, basically. Somebody who does that for a living.
yes,
Because I don't know too much about that stuff, so I'll let somebody else do it.
yes, absolutely. And I've learned some things over the years. Okay. So listen, get in touch with Vincent. We thank God for him consenting to come on our platform on tonight. We hope that you've gained some more knowledge, some more mutual funds. I am going to be getting in contact with him to start some mutual funds as well, because I'm still going to dip and dab in the stock market. Yep. Yep, I am. But I like to have a variety.
Yeah, nothing wrong with that.
I like to have a variety. Okay. And so go ahead, do that. And anything that you want to tell the people before we let them go on tonight. Hope you all had a great time on tonight. Thank y'all for chiming in with us.
Yeah, basically, it's just a matter of us readjusting our mindsets and allocating money the way it needs to be allocated. And then once we make that decision to invest money, be patient with it, because it doesn't happen overnight. It just doesn't. And if you're patient enough, it eventually works out for you, because that's the way it always has over time.
All right. So that's right. Be patient, you guys. Thank you all for chiming in. Make sure you get his information. If you have not um, um, written down his information, we'll be calling. You got another one. Gloria
Sounds
said,
good.
yeah, that's one of my
Appreciate you
members.
guys.
So I'm glad to hear that. That's one of my members of my church. So they said they're going to be calling you. So I'm glad to
Sounds
hear.
good.
Sounds good. All right. So thank y'all all so very much. Thank you for chiming in to Pastor BJ Connections.
Thank you.
See you all Sunday morning for Resurrection Sunday morning. We will be live, as we are right now, virtually having Sunday morning worship services at 8:45 a.m. We will be back Sunday morning, 8:45 a.m. Join us for Easter Sunday morning, or Resurrection Sunday morning, whichever one you want to call it. All right, we will be back. Thank you all so very much. We love you all. Have an awesome, awesome night.
Hey.